Hello and welcome back to another episode of Consulting Corner. I'm Kellie Halfpap, and today we're going to discuss the methods of financing your agency bill transactions in Applied Epic. There are two methods financing is reflected, and which method you choose depends on your agreement with your finance company. The first method is utilizing the Actions Finance Transaction workflow. You would use this method if your agency is receiving the funds from the finance company to then pay to the company or broker. So let's see what that looks like. With your transactions entered, and once the finance agreement is confirmed, you would highlight each transaction and either click Actions up at the top or right-click Finance Transaction. Enter in your finance company, and then choose either percentage or flat amount to enter in the amount that's being financed. For this example, we're going to use 100%. And what this does is move the balance from the client's account to the finance company's account. And the reason why you don't want to leave the balance on the client's account is from an AR report perspective, it looks like the client owes you that money when truly it's the finance company. And when you enter in your receipt of the funds received from the finance company, you would choose the type, finance company, and then select your receivables and choose those transactions to clear that receivable balance. The second method of financing is entering a CFIN transaction after transacting the agency bill invoice. If the finance company is paying the carrier directly and funds are bypassing your agency, besides maybe a down payment, you would enter the CFIN transaction in the amount financed. This clears the AR on the client's account when you do apply credits to debits. You would select the transaction and the CFIN amount. Fully apply. If the transaction was fully financed, the premium payable rec for that broker should be the commission due to your agency. When the commission is received, you would associate that to the premium payable rec to remain in balance with that carrier. If a down payment was collected, it may have just been enough to cover your agency's commission, resulting in a $0 premium payable rec. If there is an overage, the premium payable should be the remaining balance due to the carrier. Typically, you'd only be choosing one of these options for financing, but there's always an exception to every rule, and there are circumstances where you would need to use both financing options. Sometimes when a cancellation or return endorsement occurs, the broker will pay the finance company back the net funds, but will need your agency's unearned commission to pay the insured back fully. You would still bill the cancellation or return endorsement, use the Actions Finance Transaction method to move your unearned commission over to the finance company, and then enter a CFIN transaction for the remainder of the balance of the AR. When you disperse the funds back to the finance company, you would do page to the order of your finance company, and then you'll be able to select those funds directly from their account. Again, you don't want the balance to remain on the client's account because it looks like you owe them back the money, but truly they're going to get it back from the finance company. Thank you so much for joining me today. I hope this information was helpful, and we'll see you on the next Consulting Corner.